Hi, Bob.
Good morning.
How are you?
I'm good, thank you. How are you
Good.
doing?
I'm good, thank you. And yes, we know everybody can hear us. Hello, everybody. I hope everybody had a great summer. So how was your summer,
Sticking in
Bob?
my earphone here. So all going well?
Yes,
Take
yes.
a deep breath.
It's it's been a little crazy. We're taking the jump after doing a $40,000 renovation 3 years ago in the garage. We're actually taking the jump to go out to commercial space.
Really?
Yeah, it's just too good of a deal to pass up. It's changed a little bit since we originally started looking at it. It just by fluke. We're in there as a share space right now, and it's the old Nortel building. So when Nortel went belly up, somebody bought the building. They left all the furniture so we can furnish it for free. And when they left, they just left a big empty building. So they've started renting them out to smaller businesses. So at the end, there's going to be about 100 businesses in there. The government is taking over the top floor, which will be great for income taxes because, hey, why not get your income taxes done while you're on your lunch type of thing, right?
Excellent.
And it's only
just a walk-in.
Exactly. It's only 2 blocks from here. But originally we were going to go and we could get 700 square feet for like $600 a month.
Wow.
All utilities included. We would just have to pay our internet and our telephone. But now the space, we can't, because of course the spaces are filling up very quickly. The only spaces that would be available, like they could build, because they've got bigger rooms that they're breaking down into smaller rooms that they're going to be doing construction. We can't get in there before January. It'll be spring, but at that point it pushes us back because of tax season. So
you don't want to be moving and setting up in tax season.
If we're not in there by January 1st, it pushes us back to like July essentially. So we were just in yesterday speaking with them, and of course we want a place that's still nice and easy and visible. And there's a company in there called Qualifications, which is a nonprofit organization.
Test.
Yeah, we can hear you now, Jonathan.
Hey, Jonathan.
Okay, good. I've been having trouble with my microphones. I'm not sure what's going on. It's like neither one of them wants to get picked up. So.
Oh wow.
I'm on Bluetooth.
Okay, we can hear you. Bluetooth works. So, but
exactly.
Yeah, but so I got a minute and a half left to talk with them. So we went in yesterday and had a meeting with them at Cultivation, and there's a space that's like 2,700 square feet that they want to move into, but they only need half of it. So they're again like a startup Canada for Quinty for this area. So they have our target client.
Wow.
And we're already partnering with them in other ways. So we've sat down, we've kind of worked out some deals. So the space is going to be double what we thought we were going to. So we'll take half, which is like essentially almost 1,400 square feet, and which is hilarious. We're in 220 now. So imagine how we can spread out. With getting the free furniture, I said, fine, I want 12 workstation desks, a reception desk. We're going to have them build another little office. So what they're going to do is they're going to have to partition us off because it's one great big open room. For privacy reasons, we need our own actual office. So they're going to build an office within an office, which will be basically the room. We'll have a wall. We'll have our door that's locked. But people coming in will have to go through Quintivation. So they, again, all of their clients, we're right in there.
Wow. So the flow will be great.
It will. It'll really, really be great. And then so I said, yep. So we'll put all this stuff in. We're going to have one private office that we can do for like webinars like this. Or if clients want, a private client meeting, we'll have them build one small office within our office.
Yeah. Like a little meeting room or boardroom.
Exactly. We've got access to their boardroom because we'll be sharing with that. They're going to build a door with outside access. So we'll have our own little private parking lot and then direct access right in through the side instead of going through the main building. I'm like really excited. Anyway.
That sounds fabulous.
And there's a gym that everybody has access to, and a decompression room with like pool tables, shuffleboard, ping pong, all of that stuff to decompress on your lunch. I'm really excited. Really, really excited.
Sounds fabulous.
Yeah. Yeah, so anyway, we find out Friday if the board approved it for the nonprofit, and then if so, then we have to do the official offer into the building. But we got a verbal yesterday that with the pair of us committing together, if we commit to a 10-year, they'll put us top of the list and we should be able to be in there in November.
Oh, November.
Yeah, they'll put us right to the top, because if we do a 10-year lease
Yeah.
for the space, we become one of their most important clients. So
beautiful.
Yeah. So anyway, enough of that. We are ready to start.
Exciting.
It's very exciting. It's scary, but it's very exciting at the same time.
Yeah.
So, yeah. Okay.
At least the risk is minimal. Sorry.
Well,
risk. Thanks, Jonathan.
That terrifies me.
Hey, just trying to segue.
Exactly.
Yeah.
Exactly.
Nice one.
All right. So we will get started. So welcome everybody to Enhancing the Accountant Bookkeeper Connection series, or welcome back to, I should say. Hope everybody had an amazing summer and is looking forward to, learning everything that Bob and Jonathan want to teach us. So that's awesome. So just a little bit about myself for those of you who don't know me, although I think that everybody on this call right now, I recognize everybody's name. So I know you've seen me before. We've met before, most of you. So that's myself, Tanya Hiltz, a CPB and the founder of Cloud Bookkeeping Services and Tanya's Bookkeepers Bootcamp. Just a couple of accolades. I'm not going to read through this whole thing. You guys can all read yourself, but just the most recent ones that I'm quite proud of is just last week, actually, I was honored to be the recipient of the 2019 Professional Leader of the Year through IPBC, which is our Canadian professional corporation. I think most everybody on the call here is Canadian. So that's great. So that was quite the honor. Our Bookkeepers Bootcamp qualified for IPBC Continuing Education credits in 2018. We were Intuit's Global Firm of the Future for 2018 and Practice Ignition's Top 50 Women in Accounting for 2018. So just the top 4. Again, you guys can read the rest because there's lots there. I think it's about time for me to slow down and try to mentor the next person to get all these accolades. That's kind of the next part in my career, as well as being one of the newly elected board members on the IPBC, which I realize I need to add that in there too.
Congratulations, Tanya.
Thank you. Thank you. It's going to be a busy year. But that's what happens when I get bored and I take on new projects. So, so a little bit about myself personally. I love family. I love unique experiences, and the ASL, we started learning it, my daughter and I, and that's just kind of dropped off with everything else. I should probably take that off here. We started learning ASL. I do want to definitely continue. It's a beautiful language and something I've been looking to learn for years. But there's just some pictures of my daughter and myself and our unique experiences meeting celebrities. And then there is one picture in there with my husband. We were on a cruise, and then of course there's Rosie, our office manager. So this webinar does qualify for CEC credits through the IPBC. There will be 2 polls that must be answered in order to qualify for the credits. A recording of the webinar will be mailed within 2 days, and certificates for the CEC credits will be emailed within 2 weeks once we get the official approval. But they are approving all of them. There's no concern they won't be approved. It's just the committee only meets once a month, so we can't send it out till we get the official approval. So a little bit about KATA accounting. So I've been collaborating with Jonathan and Bob for a number of years. We've got multiple mutual clients. I think Jonathan and I figured out it's, into the double digits. And guess what? This means that when we move into the new workspace, we get a lot of businesses starting off. We're going to have even more to send to you guys. So it's a bonus for you guys too. They do work within QBO, which is great. So they don't just support it, they actually work within it and understand it, which is really, really important to have a really good cohesive relationship. And then the client, of course, is the one who gains the most benefit. Their attention to client detail is just out of this world, and outstanding customer service. So they are my number 1 top recommended for people who don't have an accountant or are for looking for a new accountant, obviously for many reasons. And I guess that's it. So you guys can take it away and take over.
Thanks, Tanya.
You're very welcome.
And thanks for the kind words.
Well, I wouldn't say them if I didn't mean them.
All right, so I'm going to take over the screen share. So today we're going to be talking about risk profiling. Everybody should be able to see my screen, yes? Okay. So we're going to be talking about risk profiling. This is an area where I've really noticed there's a lack of understanding in small business, particularly among entrepreneurs and startup community, where sometimes unnecessary risk is taken. And so we're going to get into more detail as we go. A couple quick things about us. I'm considered a thought leader in accounting and technology. Was a member of the inaugural Intuit Accountants Council. That was a group of accountants and bookkeepers who helped provide input at a very senior level as to the direction that Intuit was taking its products, both on the QuickBooks Online profile, all those types of products that we use. We are elite ProAdvisors, Intuit All-Stars, and winner of the 2018 Inspire Accountant Award. I am a known collaborator. I definitely prefer to work with other professionals than just have a very transactional relationship. It opens the door for a lot of things, but in the end, the biggest thing is the customer gets better quality, better service. So I have a lot of experience in the mortgage industry with rental properties. As a firm, we do a lot of e-commerce, digital and affiliate marketing, software development, those kind of technology companies. I'm also a member of the Japanese Canadian Cultural Center's board. I have also recently become the treasurer of a non-for-profit called Tab Community Cares. I'm an avid fisherman and MTG and poker player. So Bob, do you want to tell us a bit about you?
Sure. Hello, everyone. Great to be back with you. Listed here is my background, some of my educational, and then going into professional experiences I've had. First starting with a CA firm, which as it was known in those days, CPA now. And then a few things about the different roles I've had, mostly in larger companies for a number of years, focusing a lot in the planning industry, reporting. A lot of it was with pretty large public companies, but I always loved the small company side of things too, to the extent of actually owning a couple of businesses myself for a number of years. I then moved on to do independent consulting for quite a number of years, probably 20 years, different roles with different companies. I was recently proud to receive a lifetime CPA award, so thank you. Very grateful for that recognition. And then just a little bit about me personally. Live in the lovely little burg of Georgetown, Ontario, with my wife and our 4 cats, one of whom I hear kind of meowing around the downstairs here, so you may get to meet one of them. I enjoy a few different hobbies. I kind of move back and forth between them to keep myself occupied in those times when I'm not otherwise. So I think that's enough about me.
Okay. So why don't you just keep going, Bob?
What's that? Keep going?
Okay. Yeah, if you want. Yeah.
Okay.
I
Yeah.
always take this slide. Why don't you take this slide?
We generally do a quick introduction just to the field of management accounting. There are a lot of different topics within that field, but we like to do an introduction in these webinars and then go to a specific topic. So the simple definition of management accounting is the provision of financial and non-financial decision-making information to management of a business. So a lot of times those are ad hoc reports. Management sees something happening with the numbers or in the business, and they want a specific analysis done to investigate that particular area. So they will ask the planning team or the finance area to create a report to dig into the numbers further And so you have to kind of build something from scratch. So a lot of times it's very specialized type of analysis as opposed to kind of the month-to-month regular repetitive stuff that you do. So I think it's much more exciting field to be in than regular accounting, because you never know what's going to come down the pike. There's a more informative definition you can read there for yourself. So, Jonathan, do you want to?
Sure. So essentially, the difference between management and financial accounting is big time is on who uses it and if it's required or not. Financial reporting is what you would provide your notice to reader statements, your audited financials. Those would go to lenders, investors, things like that. They give a picture of the whole company and how they've performed historically. And in some instances, for instance, in healthcare, in education, you may be required to have a certain level of financial statements, say as a body that receives provincial funding. Quite often you're required to have audited financials. Management accounting is very different. It quite often it can look at the past, but it can look at the future, and it can look at those relationships between what drives different things. It can look at a very granular thing right down to a single employee, or whether it rained that day. That is a type of management reporting. How were our retail sales on rainy days? And often they're at the discretion of management. So quite often in small business, this kind of reporting gets overlooked. There's not an understanding by the business owners and by senior management as to what kind of valuable information this can provide. So quite often this is something that is not asked for right away. So the objective of these webinars is to introduce tools that will enable you to consider providing additional services to your clients. So what we're talking about today, I think, is an extremely important topic. I hope everybody will be able to leave here with a very, very basic checklist of things that they could speak to their clients about, and maybe some ways in which you can provide added value, sometimes as simple as an introduction. We'll get into more detail as we go, but this is definitely an example of an advisory higher value service, and one that can make you kind of the hub for that client, where they would come and ask you about things. The thing is you have to go to your client with this information, and you have to sell them on the value of it. These are just some examples of management accounting topics. Of course, we're only covering 8 this year. And you can see, like, there's a lot that we haven't done. We really just tried to pick the ones that we thought could have the most immediate value add, and that people could do quite easily. So I won't get into detail about this, but as you can see, this month we're doing risk profiling, and then we're going to cost analysis and then client segment reporting over the next couple months. So Bob, did you want to talk about this slide?
Yeah, we've seen this before. We probably have some people returning who have seen this before, but this is just an outline. I'm not going to go through it in detail. It's an outline of an overview of the financial management of an enterprise. And it goes from tax accounting to financial accounting through capturing data. Often that's the most difficult part of any analysis that you're going to be doing, is finding the right data broken down the way you need it to look. And then we get to the managerial accounting side, which is the focus of these webinars. And under that, you get planning and decision support. So and that is on the more predictive, future-oriented information about the business. It's what does our future, what do we want it to look like? So it involves strategy setting and concerns about the health of the business and so on. So risk really falls under that planning and decision support. when a business is setting its strategy, they should really be focusing on risk as one of the basic inputs to their strategy setting process. So risk is going to fall right under, and you'll notice right on the bottom, the value added to managerial decisions is much higher on that planning and decision support. So we're adding more value as we move to the right on this chart.
So one thing I'd just like to add about this is this chart really doesn't emphasize one thing that's really important, and that is the source data. Now the planning is very important because that will, direct how the source data needs to be entered. Whether you're using locations, whether you're using classes, how are you chopping up that data so it can be analyzed in the future? But that key component of the initial data capture, the process that we all go through every day, that is probably more important than a lot of these things. Because without good data, you definitely are not playing with a full deck when you're making your planning decision. So just wanted to emphasize that. So poll number 1. What do you consider to be the biggest risk in today's business environment? The economy, political legal risks, changes in consumer tastes, IT hackers and data breaches, or natural disaster?
Okay.
Tanya's put up the poll.
Yeah, it's launched there. So just a reminder that both polls, this one and the one that is a little bit later, need to be completed in order, or need to be answered. It doesn't have to be right or wrong answers, just has to be answered to show that you're paying attention in order to qualify for your CEC credits. So let's see here, one person left to vote. We'll give another 5 seconds. Oh, there we go. Perfect, 100% vote, so great. So we'll end polling and share the results. So we've got 57% are the economy, 14% are political and legal risks. Nobody has changes in consumer taste. 29% is IT hackers, data breaches, and 0% for natural disasters.
Natural disasters.
I'd like to just have a quick discussion here. Bob, you came up with these questions. In your opinion, which was the highest one?
I think the economy, but if we lived in Puerto Rico, I'd probably say natural disasters. I think it depends on the specific point of view and probably what experience has been generally felt in the business world recently. Like if there was a big IT hack, then I suspect a lot of us would focus on that as the major risk. The economy, of course, is going to be always a concern. Political and legal, maybe we're having an election right now, so that might be closer to the top of people's minds. So yeah, I think sometimes it depends on what your recent experience has been.
Okay. Tanya, I'm curious, what's your opinion?
There, can you hear me?
Yes.
Yep.
Okay, so I wasn't sure if I was muted or unmuted. I would have to say, I think it's probably it's hard to say. Natural disasters, I think, in today's market, because everything is backed up in multiple locations, I think that's pretty much a thing of the past at this stage in time, unless, of course, we get hit with, one of those, I know we've seen them in the movies where all of a sudden no computers work anymore, but I think that'll be pretty much a moot point.
We'll have a lot bigger problems in getting our data.
Exactly. So I'd have to say back and forth between the economy and IT. So the economy is a big thing, but the IT, I've been sitting in a lot of sessions, even at IPBC, even at some of these other groups that I'm a part of, like the Bookkeepers Connection Network. And there's a lot of talk about the security, the cybersecurity with that, and how people are getting in so easily. I know we receive several emails a week. We're just very, very good on it. We've got, we're locked down like Fort Knox over here with everything that we run. But that's definitely, like a big concern. Like you look, what was it, 2 months ago, I think, I can't remember which state it was. There was one state that there was 53 large businesses, and their state government was just all shut down because of the same hacker. He got in, locked them all out. So, yeah.
Yeah, I find, I think if I can focus on any one of these and say, yes, that's most important. But as soon as I go to say that, I look at the others and say, wait, I can't leave that one out. So I want all of them.
Yeah.
The reason I ask these questions, and I think that this little conversation really highlights it, is all of these are risks that need to be considered. All of these are risks that need to be planned for. Yes, natural disasters, your data might be safe, but what about your people? You know,
right.
Political risk might not be so important, but there could be a lot of legal risk for your company or things like that. And I think, again, like it depends on the way the wind blows that day, which one is most important. So I think a good understanding of a business's risk will look at a lot of these different, preferably all of these different facets. And of course, this list is not at all inclusive.
Right. And I think the political or legal risk would actually change, I think, depending on the size of the company. Because you look, I mean, we're going through, you know, starting to go through federal election right now, you know, and what do? They always, you know, throw in, you know, business. Is it big business? Is it small business? Are they going to give the big businesses the breaks? Look at last year, the impact on the small businesses. You know, Sterling alone had 7 businesses shut down. And for people who don't know, this is a small, like 10,000 population area. 7 businesses just strictly due to the increase of the minimum wage going up, you know, $3-4 an hour. I can't even remember what it was at this point, but it had such an impact. And what all those businesses ended up doing is 6 of them ended up scaling back. They couldn't afford the employees anymore because they were doing it because they loved it, not because of the profit margin they were getting. They scaled back, are working from their home, making the same profit, have no employees. So there was, I think, 20 some employees without a job, and now 6 vacant buildings, which has now impacted the building owners as well too.
Mm-hmm.
That was the 7th. So
that could in turn affect real estate prices.
Absolutely, absolutely. So you take a look at that. So I think it depends on the type of business and how they're using it in the political election as to how that affects, you know, the political and legal. So
yeah.
I think of legal. I think of one of the most common things we've seen, which is people falling behind on trust accounts, HST and source deductions, really basic things like that. But the number of small business owners who use that funds as their own money is absolutely insane. So, okay. So I guess we'll move on from this slide. We're taking a slightly different approach because we have a larger business point of view and a smaller business point of view. We're going to kind of go the gambit, but the whole point is to reinforce how this is developing and how this is becoming a new kind of subject matter that is very important. Bob, I'm going to let you go ahead with these bigger business points.
Mm-hmm.
We'll get into the smaller. Okay?
Sure. So the topics we're going to cover today are ERM. We're going to throw a lot of letters at you, enterprise risk management, and the role of the CRO, the Chief Risk Officer of a business. And I've known a few CROs in my day. And then sticking with the avian theme, we'll talk about black swan events a little bit. And then at the end, we're going to wrap up by talking about risk considerations for small and medium business enterprises. And I see on this slide, the SMB didn't get picked up. I had indicated that stands for small and medium-sized businesses. So we will get into small and medium-sized businesses toward the end of the webinar. But really, the way risk management has wormed its way into the business community is through larger public organizations and through a lot of disasters that have happened and people realized that there wasn't enough of a risk focus in the businesses. So there's been a lot of thinking and talking about how we can better manage risk over the past, I would say 20 to 30 years. There it is. So enterprise risk management, as I say, it's a fairly new discipline. You can see the little picture there, the portrayal of the risk that you might be taking on in your business. The standards and definitions are still being discussed. There's a growing recognition and acceptance of being able to manage risk in a business beforehand. Like, you have to prepare for it as well as you can. And a lot of seminars, papers, and university courses are becoming more common. I think there's even a journal of risk management now that's put out monthly with papers and people's thoughts being published in it.
And I mean, it's very academic, but you can get into some very interesting reading when it comes to what's coming out of academia. I know currently I'm reading a 40-page, very academic paper about risk mitigation in points reward programs. So it's something that you might not necessarily think about, but it is very important. Anyway, sorry, I just wanted to introduce.
And I'll just say this can take different forms, the risk management process. I've been involved in some of my contracts with developing a business continuity plan, BCP, which really is a focus on risk, where the business thinks about the risks it could face, like if all its computer systems went down, how would they continue to offer services to their clients? So it doesn't even have to have the word risk in it. Like a BCP, business continuity plan, is all about risk, dealing with it, preparing for it. So it can come out looking in different ways. So the elements, the steps you're going to take in an enterprise risk management process, very straightforward. If you sat down and wrote out the steps, this is probably what you'd write. But just to go through them, you're going to identify the risks. You're going to assess them. How big an impact would it be if this particular risk did happen? You're going to look at the response for each of the individual risks. Then you're going to monitor them and see if you think they're becoming more or less likely over time. You're going to communicate and report on them. And as we'll see as we go forward, that communication and reporting should be at the highest level in the business organization. Definitely it should be to the board of directors, and it should definitely involve senior management involved in setting up this process. And then you're going to incorporate it into your strategy process, as I'm saying.
I think all these steps could apply to small business as well. I think it'd actually be very wise for small business senior managers and owners to go through this process. I mean, the list is going to be very different for small business versus big business, but you know, it's vital. And I have seen businesses just disappear because of a lack of understanding the risk. And matter of fact, in the bookkeeping and accounting realm, this is the reason, the poor risk management is the reason most firms close. So you'll have essentially two situations: health of the principal owner and no succession planning, or you'll have explosive growth with a lack of service delivery. And both of those things can really hurt a business. You know, ramp up your costs and then your cash flow drops off, and you can have some crazy things happen that way. Or, you know, you break your leg. You have a brick and mortar office and you break your leg, and it's harder to get in and out of the office. So these are some things I think apply to small business definitely. Sorry for interrupting.
No, So the history of the crow, the chief risk officer. You know, when I was working in the large business world, it was actually an insurance company, and they would announce periodically a replacement of the chief risk officer. It made me sit back and think about that position and what would I do if I were the chief risk officer. And it always scared the you know what out of me, because you can't possibly defend against all possible risks. I mean, somebody, you know, hopefully nobody ever sees it, but somebody can come in with a gun and start shooting, like, you know, so you think about that and try to defend against it. So it was always a role that for me, I found quite challenging to think about. But the role was first implemented in 1993, as far as history can tell, by GE Capital. And as we've said, it's still today in the developmental stage. And it's being developed because as we go through different disasters, like the financial crisis in 2008, organizations found that even though they thought they were well prepared to deal with risk, they weren't prepared when an actual disaster happened. So the role took on more importance due to new regulations and different economic dislocations. And those, I've listed some of the dislocations, if using a kind term, that have occurred. And by 2017, there were more than 1,000 chief risk officers worldwide. And I suspect that count of 1,000 was just for large and public companies, where they probably have to report in their annual report their senior executives. So it would be fairly easy to count. So what qualifications does a chief risk officer need to have? Again, this is from the larger business, larger organization point of view. Probably going to have a postgraduate degree, 20 years or more business experience, and has been through the experience they have is through a commercial or strategic role, leadership role with very good communication skills. And their background might be in one of several fields. And the compensation range is pretty healthy, from about 200,000 to a little over 300,000. Now these are normal, like these aren't huge companies. So when I looked at the compensation of larger companies, financial and insurance companies, that compensation level is on a completely different planet, in the millions of dollars compensation for the chief risk officer. So it's not an easy position to roll into. So I found kind of 3 definitions of enterprise risk management. Definitions. So what is it? Definition 1 said it's a process. 2 said it's coordinated activities between different areas of the business. And the 3rd one said it's an inclusive, cohesive framework. So it definitely involves communication and setting up a process that can be followed step by step. And who's responsible for setting it up? Senior people, board of directors and management. When is it applied? Specifically, when you're setting your strategy for the business, you have to bring the risk considerations into that strategy session. If we choose this strategy, this potential risk becomes too big, so we don't want to follow that strategy. So it has to be baked into the strategy that the business decides to follow. And why is it done? So there are a few reasons there, but to manage risk, to identify threats, to prepare to deal with the threats if and when they occur. So we've all presumably been through the 2008 financial crisis, which caused a great deal of fear across the world. As the chart shows, the stock markets, really the bottom fell out of them. And the lessons that people learned from not being fully prepared to deal with the risk, it wasn't the consideration of risk wasn't being done at the board level. It was being done further down in the organization. So it just became kind of a mechanical process. It wasn't really baked into the DNA of the organization. It was just somebody sitting there, they had to tick off a box saying, yes, we have a risk management process, but it really didn't have an impact on the major decisions that were being taken for the company's direction. It had the wrong focus, so they thought we just have to keep track of the laws and we'll comply with regulatory rules. So do we comply with Sarbanes-Oxley? And there have been millions of hours spent in the business world thinking about SOX and developing processes to deal with it. So the compensation system being linked to short-term goals. So people would take short-term risks, they would increase the risk profile of the business so they could have short-term success, and their compensation was linked to that, but they were increasing the longer-term risks. And a lot of times those longer-term risks would come home to roost. The people who had defined and developed the direction of the company, basically the strategy, already had received their compensation and were long gone. So a lot of compensation systems are now being linked to longer term measures. So, you know, even if you leave the company, you're going to get a continuing compensation, but if anything happens, that comp is going to be gone. And it's not surprising, this next one, there was a lack of skills and experience, and that was simply because it is a new discipline. I think today there's still a lack of that. The risk profile areas of large companies are grabbing people from the finance area, from the legal area, who really don't have any experience with risk management. And, you know, I was one of those people. I never went into the risk field, but definitely the experience and background knowledge was lacking. And then poor internal communications. The understanding between the operating units and management as to how they were dealing with risk. And one of the things that became clear to me as I researched this is how you have to drive a risk awareness throughout the organization. Every single person in the organization needs to be thinking about risk as it applies to their function. And then there has to be an open flow of communication upwards if people at lower levels perceive risk and can see that something is likely to happen that may be a severe threat. So black swan events, a pretty famous term. There have been a few books written about this. So these are rare and random events with very broad and catastrophic consequences. An example would be the 2008 financial crisis, or some of the natural disasters that have occurred, some of them quite recently. And it's not possible to prepare for specific situations because you never know what's going to happen. But you can set up procedures and protocols so you are more prepared, and your people, the people involved in risk management, will have a menu of items and actions they can take to follow through on dealing with something that happens. So you can't just leave it until it happens. It's better to be prepared. So the protocols that a lot of businesses set up, they develop a quick response team. So you have a team that's defined to deal with risks when they happen. So people get phone calls in the middle of the night. This has happened. We're all gathering the team, and it's led by a senior manager, for example, the chief operating officer. And it will include personnel from across the organization, as well as external advisors. And those external advisors, some of them at least, will definitely be public relations people. So you can get the message out to the public as quickly as possible as to what's happening and how you're dealing with it. So you're going to develop multiple response options. Like one of the options would be, we'll have a backup computer system set up in a service center, 100 miles from your base of operations. So we can quickly transition our computer needs to that service center. So you can develop several response options, and you can use them and select them based on whatever the disaster happens to be. You're going to run periodic live scenario testings. Okay, shut all our computers off, and we need to transition to the service center. And then, of course, post-audit. After the event, let's discuss what we've learned and what changes we need to make in our risk management process. So now let's talk, that gives us a general overview. So maybe Jonathan can talk to us about why a small and medium-sized business would need a risk awareness and start to set up some of this process.
So one of the things that's probably more important in small business than in large business is the management team is very small. So a disaster can be far more impactful on a small business. Let's say that we're all located in a beautiful office near the river, and then the river floods. The river overflows and floods. It could be disastrous to a small business if all your eggs are in that basket. So I think it's really key to go through and develop your own risk assessment for your business. Your client should have something similar, and discuss how they're going to be dealt with. It can really provide comfort and evidence of good management to outside parties, banks, investors, other lenders, customers, things like that. One thing that is very commonly missed in our discussions with technology is the funding of the business. Is the business, the app partner that we're going to work with, are they going to be around in 6 months? I know this has happened to a few of our colleagues where they've jumped in both feet on a platform, and then less than 6 months later, the platform is gone, and they have to pivot and provide something similar to their clients through a different app partner. So step one is always identify your risks. creating a risk library is creating that list, and then what you're going to be able to find out more information about what other businesses are doing there. Who's responsible for managing what risk? What kind of controls do you have to reduce risk? And how do you assess the impact? And then circle it back. Do it again every year and just run through the circle. Let me just give you a couple quick examples. So one thing that is always a concern in the financial industry is fraud. So one of the things we do to reduce the possibility of any KATA staff member or team member committing fraud with the client is we don't get the client's banking credentials. That is one area where I know some people get the special card. We don't want those credentials. We want the client to have full control of the money in and out of their account, and we don't want to ever have that possibility of risk. Another thing that we do is every file that we work on has to be stored in the cloud. And this actually came in very handy recently when one of our team members, the motherboard went in the computer. She lost all the data that was on her computer, which amounted to no impact on the business at all. She was up and running within an hour. She had to reset some passwords, but that was it. She was up and running within the hour. So the cloud is extraordinarily powerful to mitigating the risk of data loss. So some different kinds of risks, financial risks, marketing risks, operational risks, workforce risks, no planning process. This is probably the most common thing that we see. A lack of insurance. Shockingly, we see this quite often. I would recommend that every business have at minimum CGL insurance. And if you're going to be on the board of a business or of an organization, I would definitely make sure that they have solid directors and officers insurance. No succession planning. That's another thing that's very common in our industry. What happens when somebody gets sick? What happens when somebody, God forbid, dies? What happens when one of your staff member wins a lottery and quits? Those are all different kinds of risks that can be mitigated with succession planning. Financing with personal funds. We see this all the time in small corporations where the entire corporation is being run off the owner's personal credit card. Part of the advantage of a corporation is to have a degree of a liability shield. And when you're using your personal debt to finance business operations, you're bypassing that liability shield. If that can be done within the business, and then God forbid something happened and the business goes bankrupt, at least the owner faces a little bit more protection. There are certain things in Canada that will follow you through bankruptcy. Number one of those is trust accounts. It's HST and source deduction, so don't mess around with those. And don't be negligent. That's another thing that can follow you through bankruptcy. A lack of spending controls. I see this all the time with startup entrepreneurs. All right, we got our funding, now let's spend it all. And you want to hold your cards close to the chest. You want to be using your resources effectively and in the right way. So is that trip out to the West Coast to visit potential business partners, when is that required in the process? You know, maybe it is required, and yes, there is no replacing a face-to-face meeting and a handshake, especially on a big deal. But at the same time, you don't need to go out there every time. A lot can be done now with Zoom, with email, with corresponding in different manners. And of course, having too many...
Jonathan, sorry? A trip to the French Riviera.
Oh, yeah, that sounds good to me. Bob's referring to one of our clients who seems to do that every year. Yes, it does have to do with their business. They have a lot of business coming from France, but at the same time, it's a big cost, and it's probably one that they could perhaps lower or do in a different manner that it doesn't consume so many resources. The most common thing I've seen is too many eggs in one basket, and a good example of that is if you have a customer who provides the bulk of your revenue, that is a very, very serious risk. So, for instance, if let me give an example from larger business. There was a company that was a target of a takeover by a large home renovations retail space, and the company didn't want to sell, but they did a lot of business with this other company that wanted to buy them. So the other company that wanted to buy them just stopped paying. They kept ordering product and they stopped paying. And 6 months later, they made an offer at half of their previous offer and snatched up the profit. So having all your eggs in one basket can be very, very risky. What's another good example of that? Having one person who's responsible for everything and no cross-training. If that person becomes hurt, sick, ill, injured, or worst case scenario passes, that could be a massive disaster for a business where that person had all the information in their head. I think that Tanya would agree that this just reinforces the importance of having documentation and having procedures and policies in place that can really help mitigate some of that knowledge loss. So external risks, changing economy, new competition, natural disasters, government regulations, and changing consumer demands. So these are some categories of risk. And of course, we could keep going and we could come up with more. But there's a lot of very simple things that we could do to help our clients. This is an interesting chart. It shows, the improbable to the probable, and then the impact from low impact to an extreme impact. And as you can see, this helps you to prioritize what your risk mitigation is going to focus on first. So for instance, something in the category in the bottom right corner that got a rating of 12 would be far more important of mitigating than something in the top left category where the probability or the risk level is 1. So each one of these kind of cards here would represent a possible risk. So you can do these kind of charts up for your clients or coach them through it and help them understand and develop risk of what could happen. Let me take a really simple example, not having insurance. I would say that risk is pretty extreme. In events where insurance is required do happen, and they can be extremely damaging to a company. And you might not think that you need it because, well, what am I going to get sued for? And the truth of the matter is people can sue for anything. They can be ridiculous. If they have the money to burn, they can sue you for looking at them funny. It doesn't mean they're going to be successful, but it's still going to cost you legal fees to get through that process. So having insurance is extraordinarily important and something that I would recommend. Bob, did you have anything to add on this slide?
Well, I was just thinking from the last slide to this one is kind of how you might lay out a program for assisting a client in a risk assessment process. So you would go to them with your catalog of potential risks, which was in the previous slide. So you could think of succession planning, you could think of financial planning, you could think of their marketing risks, just sit and have a chat with them about that. Lay out the specific risks under these headings, and then what you would do for each of those risks is go to your matrix. How much would this risk hurt us if it actually occurred? And what is the likelihood of it occurring? So then that would point you to how big an impact. Is it going to be medium? Is it going to be extreme? So it will place you on this chart somewhere. And then you go to the next step, which is how do we deal with that? How do we prepare for that happening? So this, between these two slides, really gives you a process that you can follow to assist a client in a risk assessment.
So we're on to our last poll question. Do you think risk assessment?
Going to make it personal here.
Yep. So do you think risk assessment is useful in your own business?
Well, while we're waiting for people, so we've got 3 people left to vote, I actually already want to have a conversation with you on succession planning. I was just thinking about that earlier this week, that, oh my goodness, when we go out and get into there and the business grows bigger, what happens if something happens to me, right? So that was already on my thought process. So after we get the year end done and things settle down, that's a conversation that we can have.
Yeah, for anyone who didn't attend the IPBC Ignite, there were some fantastic sessions on there.
And that was one of the ones on my list to get to, and I didn't make it on that one. So, all right, so we've got 1 person still left to vote. Remember, both polls need to be answered in order to get your CEC credit. So we will give 5 more seconds before we shut down the polling. 4, 3, 2, 1. I will end the polling, and we'll just share the results. So 86%
Interesting.
say yes.
Interesting. I'd very much be interested to understand why the person is not sure if a risk assessment on their own business would be useful. Obviously, I think perhaps we didn't deliver our message very well for that person, but I'm curious about that. I'm very curious about that.
Well, I'm thinking if someone already has thought about it and done something, they might not need it done again. So maybe they're ahead of the curve.
Fair enough. Fair enough.
Yeah.
So I know we only have a couple minutes left. I just, before we get into questions, I wanted to mention the number one, or the top risk that I've seen. No insurance, number one right off the bat. That's a no-brainer. No succession plan or too much reliance on a single individual, and no documentation of process. For instance, you might get a husband-wife team that works very well together. He does certain aspects, she does certain aspects. But if one of them falls ill, all the business is in jeopardy because of the knowledge contained in their head. Financing with personal debt is one I see. And for God's sakes, please don't let your clients play with HST and source deduction, trust money. That's one that I've seen literally end marriages. So. All right. Any questions? I hope we have some. This is a rather exciting topic for some of the topics we've covered in the webinars over the past year.
Yep, and there's no questions. So I think everything was, I think it was very clear. Again, not quite as confusing or over our heads or inundating. Oh, here's some chat. But yeah, I think it was, a little bit more clear about it. So here we go. So there's a message from Linda. So yes, so just like Bob, so she says, missed that last discussion. I think it may have been regarding my answer. So she actually has done her own informal assessment. So just like Bob thought that somebody's already done that. And that's awesome, Linda, that you've done that. So yeah, Linda, got ahead of the curve. It's just, so that's great. So
what's the biggest risk you've seen amongst small business, Tanya? Or a common one, maybe not the biggest.
The common one is really them funding their own, like them self-funding and and intermingling, their personal finances. I mean, we've got some of our shared clients to do that. And we try and we try and we try, and sometimes they listen, sometimes they don't. Sometimes I feel like, we're hitting our head against a brick wall sometimes. But that's the biggest risk, the most common risk that we come across with our target clients, because they are those small businesses. And again, some will listen, some will not, some, So, and I think that's what we found. Is there anybody else out there? So yeah. So Linda, and it's funny, Linda and I actually had this conversation in, I do believe, one of the sessions at IPBC. She uses the hit by a bus scenario, and I love that phrase. And that's so that's the only reason I knew I had the conversation with somebody. But she's like, if you walk out for lunch and you're hit by a bus. Mm-hmm. What can happen? And I mean, we've got that within our business pretty much set up, because we kind of use the same thing so that anybody can pick up. But the one thing we don't have is if I were, you know, something were to happen to me, there's no other signer, like somebody who can do the signing on the banking. It'll kind of run itself as is, but there are certain things that, yeah, we don't have anybody else, because it's just me, that could, you know, sign my checks or do whatnot. So that's kind of where we'd have to look, not from an operational perspective, but rather, I guess, you know, or not from a client perspective, client operational, but like, you know, an overall business operational perspective, because, you know, I'm invincible and going to live forever, right? So
yeah,
of course.
And that raises the point that you need to be very specific when you're doing a risk assessment. So you may think you have a process set up to deal with the banking and, you know, getting funds out or putting funds in, but you need a special card or a special password. If you don't specifically think about that step, how is the successor going to get access to that card or the password? If you don't get specific, then your risk management is meaningless, because you can say, well, I've appointed somebody to do it, but they don't have the tools they need. So you have to think in great detail about what it does take to keep things rolling along.
Yep.
Okay.
Yep, absolutely.
Well, I think we're a little bit over time. If there's no more questions, I mean, I'm happy to talk about this for another 30 minutes, but people have schedules.
Yeah, no, I think this one, again, it was really clear, and it's something that, you know, that from, you know, our perspective hasn't, you know, been a little overwhelming, because some of the topics, although they're great information, it's completely new information to some of us, or, you know, whatnot, where I think this here, you know, hasn't been completely new. Just a lot for us to think about, because I bet you that out of everybody that said, yes, it would help for their business, we have probably coached our clients through it and helped our clients through it, but not ourselves. You know, it's
just to share one of the goals that I have is by the end of next year, I want to be able to fire myself.
Right.
You know, I don't want to be fired, but should the need be, then I want that to be a possibility. I want the business to be beyond what's in these 4 inches, you know? So that's something we've been working on a lot over the past few months. And we'll continue to over the next 12 or so. Okay.
All right, awesome. Okay, well, thank you very much, everybody, for attending. Thank you again, Jonathan, Bob, for such, you know, great information to us, and all the extra knowledge you're helping with. There's Linda says thank you, so that's awesome. Yeah, and then we will see you all the last Wednesday of next month as well, too.
Absolutely.
Perfect.
Thank you very much for hosting.
Thanks, everyone.
Thanks, everybody. Have a great day. Bye.
Bye-bye.